Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your daily technical analysis of foreign exchange markets. I'll start with the euro-dollar. A second consecutive, if higher, indecisive spinning top yesterday. The market continues to see pressure from below and above. Above is the declining short-medium moving average, currently 107.18, which was breached again yesterday, but did not see a close over. Plus the recent cap on prices, the May 2020 low at 107.66, along with a rapidly descending February to date downtrend, currently at 107.39. Was pressing down, which was touched, kissed if you will, for the first time yesterday since March. Below, we have the considerable and interesting support from the declining middle time, currently at 106.53 of the well-highlighted January to May 21 bearish Andrews pitchfork. Now, stepping back a bit, the downward pressure by the short-medium moving average for nearly 2 weeks now is important. I'd ask you to only look upwards on this daily chart at the last time the market met the short-medium moving average back at the end of March and the resultant move lower thereafter. It'll be interesting to see what the market makes of it this time, whether it makes its own way or repeats what happened back in late March. Looking further below, the next support is the 2020 low at 106.35, but the better support starts from the April 2017 low at 105.68 and extends lower thereafter. Meanwhile above, beyond the February to date downtrend, we have the declining medium moving average, currently 109.30. So far today, well, nothing much as yet. A small move up over the April 20 low at 107.25 and towards the downtrend, but prices have pulled back to where they opened yesterday. Cable, aka sterling against the US dollar. An immediate countering bearish dark cloud cover pattern and bearish double yesterday. This after the previous session's interesting key reversal up. Thus my thoughts about the market may be giving up its very recent intraday indecision, they seem to be premature. We still have overhead the well-highlighted resistances at 126.72 and the September 2020 low at 126.86, which had recently capped the market. Meanwhile below we have the support between 124.78 up to 125.09, which contains the 38.2% Fibonacci line of the June 21 move at 124.89. Yesterday prices dropped down to rest on the support zone, 124.78 to 125.09. Now so far today, well, a slight test lower as a follow-on to the combined action yesterday, piercing into that 124.78, 125.09 support zone, but finding it a bit of a hard going down. Euro sterling. A reactionary bullish engulfing pattern yesterday as the market chose not to try down to the support at 84.70 and also to forego the chance for this week to be set up as a possible weekly key reversal. Having removed the detritus of the recent broken bullish Andrews pitchfork and reassign the uptrend, I can see a possible ascending triangle type formed since mid-May. I'm not wholly happy with this designation, as I fear it may be a bit of optimization on my part, or a little bit too much perhaps. But I'll let it ride for now, or until I get a better perspective. Overall, we have supports further below from the April 21 low at 84.70, also the broken September 21 today downtrend, currently at 84.58, that makes up the upper trend line of the extended diamond pattern. Then there's the flatlining long moving average, currently 84.40, the rising short medium moving average, 84.41, and the upper trend line, currently 83.92 of the smaller and more robust lopsided diamond pattern. Thus, we still have the following targets on the upside for the smaller lopsided diamond pattern. For primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. And for the extended diamond pattern with a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Additionally, there's also the one final pattern, and it is a big one, which this market had previously triggered but then sent mixed messages on. I've spoken for months about it now, of the large or very large falling wedge pattern, currently 84.58 to 81.45. This pattern is still in operation, but has fallen into the shadows a little with the rising prominence of the diamond patterns. And though triggered, it still leaves us with some questions, which continue to grow in number. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area, and that is a really big ask. So far today, well, a small continuation higher from yesterday's combined bullish pattern. I suspect that the upper trend line of the proposed ascending triangle pattern, which is currently 85.89, may well be an obvious target. Well, may well be an obvious goal, shall we say, for any move higher. US dollar against the Indian rupee. An indecisive doji cross yesterday, as the market is having all sorts of doubts on approach to the all-time high. We still have the broken ascending triangle pattern above, with the market closing once again just below the lower trend line, currently 77 3/4. Interesting, the flatlining short moving average, currently 77.60, has acted as a support for the 2 days now. Further below, we have the lower time, currently 77.56, of the January to April bullish Andrews pitchfork. This is the time that provoked a strong bullish reaction late last week. Now, overall, the market is still within, just about, very much just about, the same congestion zone between about 77.40 to 77.80 that we've seen for the last 3 weeks. Price is also still in between the previously mentioned lower time below and the middle time above, currently 79.01, of the mid-January to early April bullish Andrews pitchfork. Now, as a precautionary move only, I've drawn a new shallower lower trend line, currently 77.42, as an extension of the ascending triangle. I'm not sure on this, but it seems that it is a reasonable thing to do right now. Meanwhile, we still have overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible, if ragged, bullish halfway hesitation. So far today, a slightly higher open and a tentative attempt higher, back up over the original lower trend line of the ascending triangle and over yesterday's high, but balking at moving up to test the all-time high at 77.89. US dollar against the Brazilian real. A third bullish white soldier yesterday and a small follow-on higher to yesterday's bullish opening white Mariboso. Personally, I find yesterday's action a disappointing follow-on, having only just managed to push up and close over the next resistance level of the 2021 low at 489.08. Now further up, we have the 50% Fibonacci line of the October 2019 to May 2020 move at 496.58, which is a gateway to a whole load of further resistances. Meanwhile below, we now have some significant resistances that have turned into supports. Notably, the 50% Fibonacci line of the June 19, May 20 move at 484.26, and the short medium moving average, currently at 484.12. In a bigger picture, we're still in between the upper time, currently 499.06, and the middle time, currently 452.96, of the January to May bearish Andrews pitchfork. This is still an early development bearish pitchfork, but it has started to show some merit in forming and hence showing the recent bearish angle of attack. Now, a contrary point. I have for the first time been tempted to draw an April to late June bullish Andrews pitchfork. For the moment, I'll resist this temptation, at least until prices formally break over the upper time of the existing bearish Andrews pitchfork and maybe even over the upper time of the shift pitchfork for the same move, when I get round to drawing it if it's needed. US dollar against the Mexican peso. You could look at yesterday's action as a third indecisive pattern in a row, just with a long tongue on top. However, I'm more minded to look at it as a possible shooting star pattern, though I have to admit as to whether it is a type 1 bearish or a type 2 bullish, well, I haven't a clue as yet. We still have the same parameters as in recent days. Overhead, the next resistance is still at 1971.68, the April 22 low. Whilst near the middle time support, currently at 1937.99, of the November 21 to March 22 bearish Andrews pitchfork, we have last week's low at 1940.70. Now, so far today, not much. A dip to the 2021 low, then more like a kiss. And we're sort of staying around there at the moment and wondering whether we're going to move up towards yesterday's low or yesterday's closes. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.